Good afternoon. It's been about 3 weeks, I think 20 days since I did an update, so just gonna fill you in on what's been going down since then. Most importantly, first of all, we're up to 500 subs, which is fantastic. Halfway to the goal for the year. And thank you all for sticking around. And if you're new, very welcome to you. Secondly, we've lost one stock, which is Homeserve. I made a single video about it, but I'll just give you a little rundown of the one I replaced it with, which is the company that absorbed it, and that is Brookfield Corporation. I had some Brookfield renewable partners, which by the looks of it they've kept. I had this one, but I have purchased Brookfield Corporation. So we lost a company called Homeserve, which I was pretty hopeful for it. It was in a list of companies called the UK Dividend Aristocrats. And the criteria for that group was that they had to have, as far as I remember, a £1 billion market cap or above, and no dividend yield over 10%, and consecutive dividend payments for, I think it was 5 years or 10 years. But either way, good ones. Homeserve was in there, it's now gone, and it was absorbed by this company, Brookfield Corporation. So I figured I may as well add them in. If you can't beat them, join them and all that. But I'm not sure if I have had shares of this, if Homeserve would have been converted into Brookfield. Now, if I had bought into Homeserve on a peak and say it had fallen down to here and then been absorbed, I could have lost money on it, but I seem to have gained about 17 cents. Pretty much nothing, but at least I got back what I put in. So no real bad news. We are back up to 721 investments, and the largest in the dividend portion is AG&C, which is a monthly paying stock. This also pays every month. That is a meme. This is part of the UK Dividend Aristocrats. Pays every month. This is one of the best dividend stocks you can get, Clorox. Same with GlaxoSmithKline, Rio Tinto, so on and so forth. But as you can see here, each one has about 1% of the total value of the portfolio. Now, GameStop and AMC, they were part of the meme craze, and you can actually see where they were on my portfolio, the overall growth. That there is the height. Part of what I wanted to talk about today, it wasn't just this, it's the importance of taking risks like this. So if I had have sold here, I would have, more than doubled my portfolio. And as far as I know, I did sell a bit, because as you can see, the amount of money invested between here and here is much larger. It's about £1,000 in the difference. The return shot down. I think I sold it as it was tanking, and in here I put it back in, and it shot up to 3,700 with a return of pretty much nothing. So this was July of 2021. The oldest one I have is on the 2nd of February. So this whole portfolio, all this graph that you can see, is not just how the dividends have performed, it's that since I opened this account. And in the beginning, this here is the 1st of August of 2020. I had €350 invested and it was down €20. And I think the first bit that I invested into this account was like €27. And I put it into Tesla and it dropped like 20%. So that was my experience. I saw an ad on YouTube for Trading 212, downloaded it, and I was investing as time went on, little bits. Then the big memes came along, absolutely spiked up to here. But what I wanted to talk about is how I've been investing recently. The account is up to €11,500 and I got paid. So I have €200 to invest. 3 of this is the daily €3 and the rest is dividends. But over the last couple of months, I've been investing into some cryptocurrencies. So this, if you've been watching my videos for a while, you would have seen this account a few times. And I jumped into crypto at probably the worst time. But at least I had the good sense not to go wild and put all of my money in a single place, hoping it was going to double or triple or any of that. I did have unrealistic expectations, as you can see. But I spread it out quite well over a lot of them, and the majority of them absolutely tanked. But I've been putting money into these in no particular no particular method or no order. Just if something drops 10% in a day, I might throw something into it. But I have been kind of lucky using this account for it because it doesn't combine all of your positions. So if this was on trading 212 quant, if this was on trading 212 and I opened these three positions, it would just combine them all and I would have X amount of the coin and my average price is such and such. But now I can see that the oldest ones of these that I have, the worst one is down 15%. But quant is relatively new. I'll go to an old one. Doge, yeah, hammered. 88% down. I opened this position on the 8th of the 5th of 2021, where it was 72 cents. And now it's down to 8 cents. So I have been putting money into cryptocurrency because of how bad it's been doing for the last, is it 2 years? The guts of 2 years, it's just been in a bear market, having an awful time. And every time a cryptocurrency exchange goes bust, I worry a little bit, but it's just a buying opportunity. Now, before I go back to the dividends, if you're thinking about getting into cryptocurrency, you should really consider the risk and not just, everyone has a habit of focusing on the good when they're optimistic, and they might look at, say, Bitcoin and say, oh, well, if it goes up to 50,000, I'll double my money. But what you need to understand about this is it's extremely speculative, which means it's almost like a guessing game, and it is just gambling. Now, I don't know what any of these things are going to do on any given day, and I don't know if holding them for years will work because they could go bust at any moment. Now, a few of them are not included, like Bitcoin was very useful, Ethereum also. Quant is supposed to be quite good, but I've basically put little bits into loads of different ones, and what I'm going to do is anyone that I have an old position in, let's say EOS. So this is new, it's only 3.8% down, but my old one is 92% down. So now this position that I have, if this goes up, say 10, 20%, I'll just sell it, put the money in somewhere else, or even just wait for it to come back down. And the reason I'm doing that is to kind of get the gambling bug out of me a little bit, but also to try and supplement the money that I'm going to put into the dividends. Because if I was to just put my income in, it will take a very long time. It will work eventually, but it will take years and years and years more without the risk. So as of the recording of this video, I've deposited 10.5 grand. I have about 1,700 in realized profit. The majority of that was AMC and GameStop, which I've put back into them. So I'm now down 70 and 90% or something on both of them. And I have €411 in dividends so far. So ticking along nicely. And I am noticing that a lot of the stocks that I have are getting into the double digits, which is very good. Still quite low, but very good. I haven't sold anything, as per usual. And I think the crypto account and also some of this growth, I might put a few bits into some of these. This where we are now is looking very tempting. Could easily go down to like here, or it could go up to here. You never know. Anyone who says that they know is a liar or a dangerous idiot. But it's significantly down from where I started, and it's Google. But I haven't sold anything, and I'm trying to take advantage of the €12,070, or Jesus, that would be nice, €1,270 per year on the Irish tax system that you're allowed to get in capital gains before you pay any tax. So try and work up to about €1,300, and then if there is opportunity to sell and make a profit, I'll do so and pay the tax on it. But it means I won't have to sell any dividend positions to kind of catch up to that $12.70. What I've been purchasing as well, these positions that are the smallest by market value, I'm trying to get everything above €10. This I can't because it's been sanctioned. But basically any position I have that's smaller than €10, I'm going to add into that. And I've been doing that for the past couple of weeks. I'll give you a quick glance at what I've bought. So it's all small pieces as usual. Haven't sold anything. And there's been no really significant ones, like massive investments. But I do have €205 to invest now. So I'm going to go back into the full list and just start bulking up all the small ones. If you are new to dividend investing, I would not recommend this strategy because I don't know if it's worth it and I don't know if it's going to work properly. And it is a bit of a stress keeping track of everything. Like, I'd be lying if I said I knew what even half of these companies did, or even half these ETFs. But I do have to log all the dividends that come in. Anything that comes from the States has to be separated. Anything that comes from the UK has to be separated, and anything that comes in Europe has to be separated. And then there's also returns of capital, which you don't pay tax on. Different types of dividends. It's a bit of a nuisance, but I've kind of exchanged the stress of keeping track of the actual companies themselves. I've exchanged that for basically mechanically logging the dividends. And when a company goes bust, it doesn't make a huge difference to me because it's less than 1% of the overall portfolio. So I think I will start adding into the ones that are all the smallest. Now, I don't really like just whatever it is about it. I don't like adding into positions that are green, but it's an inevitable part of investing. You want your positions to gain value. And if you buy something, even if you put 10 grand, say, into MasterCard a few years ago, and you're 10% up, it means that you'll be paying 10% more than you did back then. But that's kind of the idea. Buying the discounts is lovely, but you will also have to buy as it goes up as well, if you so desire, of course. So out of all of them, The only two that I invested enough to get straight to €10 were Visa and MasterCard, because I'm not sure why the position is so small. It should be a lot bigger. But now what I'm going to do is I'm going to list everything in order of the result, so how it's performed since I bought it, and then I'm going to fill in some of these big reds. So sanctioned, meme, sanctioned, dangerous, I think. Probably not going to pay a dividend for a long while. Sanctioned, meme, nationalized by the German government, so I don't really know what's going to happen. So I'll start here. This is a casino stock, as far as I know. Yeah. Ooh. Okay. And it's based in the UK, so double devastation. So I'll start from here. And I think I will put, I've got €156 left. So I'm going to put €10 into, I think into 15 of them. Actually, no, I'll put €10 into 10 of them. And then I'll put the last €50 into one particular nice monthly pair. So 888, I'll throw a tenner in there. I do actually get ads for them quite a bit. I think they do like online slots and casinos and all that kind of stuff. Loyalty Ventures, I think I got as part of a demerger, and it is not doing well. 96% down since the start, and I would have received it at the start because it was given as part of a demerger. So I'm not going to go anywhere near that. I don't have hope for it. Same with Senstar Technologies. Devastating. There will be no dividends from them for quite a while, I'd imagine. DigiHost Technology is a crypto company that does not pay a dividend. I bought them because they were mentioning paying a dividend in Bitcoin, so I think I threw in like €30 to see what would happen. This one, this comes up a lot. ZIM Integrated Shipping Services pays an outrageous dividend, and I think the last time I saw it, it was 156%, which is insane. Like 10% is a high dividend. 156 is not possible to pay. It would just buckle them. So I think the dividends are still high, but the risk is even higher. But it is important to have a little bit of risk in your portfolio. And even if this was a €100 position, it would be less than 1% of the overall. So I'm going to buy €20. And then I don't have to worry about it for a while. Now buy me a share. Marston's, this is a pub and restaurant, I think, in the UK. Probably won't be paying a dividend for quite a while. Yep. I don't think I've ever gotten one from Marston's. So I'm going to leave that one for now. This is a monthly pair. It's down quite a lot. That deserves €10. Now, just buying stocks as they go down is also not a great suggestion because they're going down for a reason. They could easily continue to go down for a long time. But that's the beauty of having an overly diversified portfolio. Don't have to worry about any of that. No, worst case scenario, if the company goes bankrupt, I'll lose less than €100. Bread Financial, I don't know anything about them, so just a fiver, play it safe. It's a tech-forward financial services company. Looks quite big, 6,000 employees. Engaged in providing simple, personalized payment, lending, and saving solutions. Right, fair enough. So they can have a fiver. Phoenix Bree Deutschland, UK, yeah. UK is suffering big time at the moment, as is my position. Good lord, look at that. 37% down, it looks so much worse. I'm going to put a tenner in there. Broadmark, this pays every month. Yeah, €20 for you. Extra spice. Orchid Island Capital, same thing, and it is like constantly going down. Looks like it's actually recovered a little bit. So I will give them a chance, even more of a chance than I currently have. Only down 35%. Dividend yield 15%. That is massive. Revenue, very bad. Earnings per share, very bad. I'm only going to put a fiver in there. just to see what happens on the off chance that they can turn things around. Grey Elm Capital, I think I get €2 per dividend payment from them. So I'm not going to touch that. It's actually one of the few that will get to, see, on top of having €100 in each position, the kind of general goal is to get €1 or more per dividend payment. So if I'm getting multiple dividend payments every day, it will be multiple euro every day. But I think this is already over the limit. I think it pays like €2 per dividend payment 4 times a year. Varta, hammered. 9% dividend yield. Ooh, okay. And look, yeah, earnings per share, positive. Revenues, positive, very positive. P/E ratio of 8.71. About 4,500 employees. This actually looks quite good. Profit margin 14%. Debt to assets 57%. That's actually pretty good. McDonald's is like 100%. Debt to assets ratio. They owe like money on everything that they own. I'm actually going to lump this. Yeah, I think so. I'm going to purchase, I think, a whole share and a half. Yes, very nice. Now, because it's a German company, it probably only pays a dividend once per year. That's the kind of rule of thumb with German companies. The UK, there is some that pay every quarter. I think I made a video on it ages ago, but I'll have to update that. But the UK is generally twice, and then Americans are generally 4 times a year, or every month. There's a few monthly paying UK stocks too. But that's the kind of general gist. It's what you can expect. Okay, sorry, I thought it wasn't allowing me to do that for a second. Laptop just needed a second to breathe. Philips, I got a notification about. Apparently they've done well in the last day or two. Yeah, still not making a huge difference though. Yeah, very nice. Philips, this is Philips as in like electric razors, and you've probably seen Philips stuff around. I'm going to purchase an entire share. Go absolutely wild. €16. SL Green Realty, I think, pays every month. I do believe. And that will get the remainder. €13.12. So quite a lot of orders gone in. An extra €205 into the portfolio. And there's probably a bit of it that won't go through yet. Yeah, another 105. The German market and the UK market is closed, so I won't really know until tomorrow. But that's pretty much it for today. Nice bit of spice added to the portfolio. And I think you should check out Varta for yourself. That's looking pretty good. Just got hammered along with everything else, but you know, profits are decent. Might actually do my next breakdown on them. It's looking pretty good. 71% down in the last year. Oof. Now maybe there's something here that I'm missing, but there's bad news all over the place with the UK, with Europe. The States not so much at the moment, but we're in one of those cycles where every YouTube video is about the recession and how awful everything's going to be, but it is a reality in the UK and in Europe at the moment, and I think the States will eventually follow suit. So good news for discounts, bad news for overall portfolio value. And then if the opposite was to happen, then the reverse is true. Bad for the discounts, excellent for the portfolio. So win-win.